The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I got the market getting nailed this morning. We got the S&P down 24 points. Russell's down 15.5. NASDAQ currently down 32 points on the day. Dow down 171. So this market sell-off just keeps going further and further and further after Bernanke's detailed response on potential QE exit later in the year. Looking on over at oil, it's currently up about 24 cents right now. Decided to do a little bit of a rebound after the sell-off of that dollar strength has been taking place. And looking at natural gas, it is down 1.2%. Never ceases to disappoint with its massive moves over there on natural gas. And corn is down at $8.50. And I noticed corn and soybeans, I mean, they have some really good moves you can take advantage of, 1% moves. And they're very smooth markets on many, many days. We'll check those out. I don't know how smooth they've been today. I haven't traded them yet this morning, but we'll go in and look at them. We did a soybean and a corn trade last week. Looking on over at euro dollar, it's currently down just a mere 21 pips. Aussie dollar up 38. Pound dollar down 4 pips. Dollar CAD up 62. U.S. franc down 7 pips. Euro yen down 52. And then looking at pound yen down 6. U.S. yen down 22. Gold currently down $15 on the day. And looking over at silver, down 2.3%, and copper down 2.3% as well. So the metals getting nailed along with all of the indices. And that wraps up our current market wrap. Let's go ahead and look over at what news we have coming up this week. And really nothing major on the list for today. We did have the German IFO Business Climate Report. And I guess you could say it's a tradable event, but not really. I don't put it on my tradable event list. So it's one that you need to be aware of, but not one that I really collect stats on and, all that other stuff. It doesn't have enough consistent, impact on the market for it to be worth me really putting a lot of time or energy into that specific trade. And so let me go. We'll go over here. We'll look at the euro dollar just on that one. It really was the only report that came out today. And we'll check it out. So over here on the euro dollar, zoom on in. IFO business came out at 4 a.m. And, there was a little pop on the thing. It went up to about, 125, about 15 pips up and down. But definitely nothing to write home about. Euro dollar's just been flat all day long. And really just bouncing, doing a little bit of a swing trade there between settlement and 0.5. Went down to 0.7 for a little bit. And just bouncing up all night long. And so that's a trader you might be looking at, potentially maybe a binary butterfly that you could look at doing whenever you see a market that's this flat. And then we're in lunchtime on top of everything right now. So that makes it even a better setup for a potential butterfly. And I could show you, let's look at that. Let's just see if there's a potential trade that might exist right now for butterflying the euro dollar. And let me pull up our spread scanner. And we'll see what we got. Okay, our binary scanner. We can even look at the spread scanner. You can do iron condors also. But let's go over here, pull this onto the screen while we're looking at all this. Okay. And then we'll go right in to the spread scanners. And check out the binary scanner. And we'll go over. We're going to look at euro dollar at the moment. It's just been so flat. Turn the indices off. And we already got our risk-reward settings in there. I'm going to bring them down, though, just for the next hour here. Let's see what we got. If we got anything coming up that looks like it might be a potential trade. We do have 30.88. That's pretty close. Not a big fan on that one. Let me bring it out a little bit further. Let's look to about the end of the day here. See our 3 o'clocks lining up. And then let's get both sides. See if we can see a decent butterfly or not. We can get till the end of the day, 3 o'clock. That's one potential trade setup for you. You got the 30.80 and 31.11. That's still a pretty tight range. I'm not a big fan of that trade either. So right now I'd be backing off on the butterflies. I'm not saying I wouldn't do them. I just wouldn't do them this far out. I'd be more looking to do them closer to expiration because there's not that much time left until it comes up right now. So now that we got that one, let's go in and we'll check out some other markets at the moment. And let's look at a couple other currencies. We'll check out the pound dollar. And let's see, pound dollar. We got to move on down 0.5, 0.7, and went on back up to 0.5, then on up to settlement. And so that right there, you can see, perfect move. Went down to 0.5. It stayed there literally for about 2-3 hours. Then moved on down and stayed there for about 4 hours before heading straight back up to settlement. Trying to do a little bit of a pullback almost down to the 0.5 level, and now just right back at settlement where it ended at last Friday. And let's see, we'll go in and check out the U.S. CAD. See what we got. We got settlement sort of popped up, had a little bit of a gap opening on that. Then moved on up to 0.5, stayed right there. 0.7 oscillated right around that level. Went on to one deviation and could not break it until this morning. Then tried to move on up, but still hasn't done anything. So pretty flat market on the Forex pairs we've looked at thus far. And then, we had a nice trend if you've been trading since last night. But beyond that, just look at all this mess. We're getting a 0.5 to 7, 0.5 to settlement continual trade going on. Now, one of the ideas I want to, sort of open your mind to, they are options. You can do them in all sorts of different ways. And you start seeing that maybe we have a pattern here. Maybe we got a little swing trade going on between these levels, right? Between settlement 0.5, we see that a lot, actually. So you can see settlement 0.5 was working quite well up there. Is you can go over here and you can decide to leg in to a butterfly. You don't have to hop in on both sides if you don't want to, okay? And you can leg in usually at a pretty close to 1-to-1 or even better scenario, depending upon how you want to put it together. So if I go over and look at a dollar franc, and we're getting pretty close down here to 93.27, and right now 93.23 is going to cost me 86.50, 93.19, 85. I could let it go a little bit further down, so closer to this 83.27. This, you could call it this support level for the day, okay? And I could choose to buy this at $75, all right? Now, I might even be able to get a further out strike. Anyways, I put that trade on, and now I got to monitor. I got to babysit it a little bit, okay? Because that's a $25 risk for a, $75 risk for a $25 reward. But if I'll put that trade on, I can exit if it hits my strike. So if it keeps heading down. And basically put on a trade. If I can buy the thing for $75, okay, I could get out of it, and I could even put the trade on now, but I could get out of it at 50. So if I put in an order to buy at 75, it drops down, it hits that, and then I'm ready to exit the trade if it hits 93.23, which means exit at 50. So if I buy at 75 and I sell at 50, I lose $25. If I buy at 75 and it goes up, to the top level there, then basically I'd make $25. And I'd probably choose to get out like at 96, just so on the bounces, the oscillations, maybe I could do this trade several times. But either way, so I get in that trade, and then it bounces on up here to 93.50, okay? Well, when it does, I sort of flip around to the opposite. Maybe I go in and I sell the 93.60 for $25, okay? And I just play the swing, the bounces between the levels on a butterfly, and I get a much wider butterfly than I would if I just went in and threw the trade on now. So, like right now, if I threw on this trade, I'd be hopping in there and trying to get in on this trade at, 93.49 is really the furthest out I can go, which is right up there at the settlement price. That might be a little too close for what I'm really looking for, okay? So, just keep that in mind, all those different choices that do present themselves, and that may be the best one for you, of which one you can take advantage of. And let's see here. We could also you can even look at the spreads to see if there's any kind of trade you want to do on that. We can go over here. We can look at the dollar franc, see if there's any premium in them. And one of the new features I just had added is you could actually go in and reverse this thing to like 1,000 and then like minus 1,000. And minus 900 and positive 900, whatever. But you can see, are there any spreads with premium in them? Because sometimes you can see some really good premium spreads where it's inverted. And it's sort of weird because normally, you want the you want the ones with as little as possible. But in this case, we can choose to sort of go the other direction on them and see if we can see anything that might work for us. And see if I can find any for you. All right, looks like we got a couple there. Right now, we'll just look on one side. And we don't really see anything on the sell side. You want a positive number on the sell side, a negative number on the buy side. And we're not getting that yet. So, but if we do get that, you'll especially see that on oil. So on crude oil, we'll see that, where you can take advantage of it. Where a lot of times, if I reset the filters here, sometimes you'll see some opposite premium collection. Like 6 ticks. And sometimes this will be like 20, 30, 50, 100 ticks. So you may actually see that there's some premium collection you can take advantage of inside the spreads. And those can be very cool trades, especially before news, things like that, that doesn't have a big impact, but still they pump up the implied volatility. That's one of many ways to take advantage of it. But when you see a negative number on a positive spread, that's premium collection. That means I'm buying, like this right here, I'm buying it for $8 less than where the market is. I can basically make $5 on this trade. If the U.S. franc stays above, let's see here, I can buy it right now at 93.45, and we pull that one up. This is a 93.40 to a 94.40. So normally you would not want to buy this spread because it's already basically at the cap, okay? And but in this case, you actually could go in. You could take advantage of it. We got it at 93.37. If I can buy it, at a better price, well, then that's just all the better. So anytime you can take advantage of that, that works out really, really well for you. And so anyway, so we got that as one possibility. I'm just sort of going through, and this is what I do. I sort of scan through the markets and see, what opportunities are presenting themselves that I could potentially, take it. And let's see what we got here. Let me move that out of the way. We'll look over at a couple other markets, and we'll scroll through to see how they're all flowing right now. But you're definitely staying very range bound on all the currencies. So butterflies aren't a horrible choice at this time. Maybe one of your most preferred choices if you're looking to do trades right now at all. Because directional can be a little bit more challenging if the market's moving a lot on you. The dollar yen has decided to have a little bit of a trend, just bounced off its 0.5 level. We can see right here we got to move up to 0.5, 0.7, back down to 0.5, oscillated down to settlement, right back to 0.5 to the tick, turned back around, hit the 0.5, and went right back up. So you can definitely see when you get these breakouts, sort of where is it going to next. And, if you've listened to my show much, I definitely have a few different strategies I like to use, but one of those is I'll use the 10-minute deviation stop method, and that sort of lets me know which direction I should be going. We'll talk more about that when we come back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just checking a few things out around, just looking at the markets. Got the U.S. yen right now, like it wants to move up. Yen is currently gaining strength against the U.S. dollar's weakness that we're starting to see develop. So all sorts of trade possibilities coming up from that you might be able to take advantage of. So we could look over at some different setups. What could we do with that on Nadex? Over on Nadex, let's pull it on up and we will see. Okay. So what we got is, let me see here, let me pull this back up in front of the screen for you. There we go. We could look at either spreads or binaries. So to say, USDN, we see that trending right now. Let's check it out. We're looking at buying. And we got, let's see, what time is it? It's 1:25 right now. So there's a few different ways to take advantage of this move. If you're trading spreads, I'm not expecting just a massive pop. I'm just expecting a general trend. So I don't really want to have something that has a very far movement to break-even distance required. I want maybe 2, 3, 4, maybe 5 pips at most. Trying to keep that as low as I can. And so one trade possibility, you could be looking at this 2 o'clock, 97, 98.70. And so we could grab that trade. That's a pretty close trade right there. And let me go back up here. Make sure I'm on. There we go. And click on this. Bring up the ticket. You just go in and do one simple trade. And, we have $17 risk on the trade. So I'm going to go ahead. I've got filled there at 97.87. And if I just want to do, say, a 1-to-1, okay? So 97.104, so 98.04. And so I could go in and I could literally put, if I wanted to, just put in this take profit here at 98.04 and change that to a sell side and let it work its thing out, okay? So now it's got that going. I could also look at what are my possibilities on binaries. And we could look over here at the US yen right here. Check it out, see what we got. And I may even lower this one down to like 55. See what's sort of sitting here. And, well, if I think it's going to go up, I could buy the 96.65. 97.65. There we go. Okay, 97.65. That's still pretty close. But I could get into that for about $85. 97.70, it's only 10 ticks away. Get into that for $79. So it depends upon, how much room, how much time I want to give that market to do its trade. So, but that would be one possibility. Would be the 96.65. I'm seeing it sort of tick down at the moment, so I'm going to hold off for a hop in on that trade. But if I were to do that trade, I could open it up right here. I could even get my ticket ready as one of the potential trades I'm looking at. Another trade, when I start seeing that initial pop, maybe like if it breaks right here, if it breaks 97.83, starts moving up higher again, makes a new high on this current bar. Sometimes what I'll even do is I'll go in and I'll grab one that's a little bit more, just barely in the money. And I've been playing with this one, and I do like it. Know some other traders that are doing this as well. We'll buy for like 60 and sell for 80. We want a little more time left on the clock. So right now we're at half hour, not really the ideal trade. Really, this is about the time we'd be looking to get out of the trade if we were still in it. But so looking over at this trade right here, but if you're buying like at $60, you sell for $80. If it goes against you, put in a take profit for maybe like, right around, if you bought for 60 to get out at 40 or maybe 60 to see if you can just get out of that trade if it's not going anywhere. So, but really you're looking to get out at $80. So it's sort of cool. It's a $20 trade, premium collection trade, but on a very, very short time frame that you're trying to go in and take advantage of it. So, anyway, so we got this trade, and to remind you, how do these premium collection trades work? If the market stays above 97.65, okay, we're at where it's at right now. Basically, if it stays flat, if it goes up, if it comes back down a little bit, then we profit on the trade. And some people look at these and they get freaked out, and I totally understand because I was the same way. But I did iron condors, iron butterflies, iron albatrosses, things like that for years that had insane risk-reward scenarios, okay? And, you got to know, you need to have an idea of what you're doing, but the risk alone doesn't tell you the entire story, okay? Because there's also that probability factor. I'm going to get a 1-to-1 when the odds are 50-50. Okay, so if it's at the market, yeah, I can probably buy for 50 to sell for 50. All right? Or I may flip that around and I may get, better than 1-to-1 if it's out of the money because my odds are lower. Maybe I'm just a 20% chance it has to move higher. Or, I get a higher probability because 3 out of 4 possibilities line up in my favor. So we're going to talk about that and even a pattern I see setting up right here that we might be able to take advantage of. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. So as you can see, we got the market moving up. We got in that 97.65 right there as it's moving on up. One of the examples I gave you earlier was grabbing this trade right here, right around 60. And $60 right there at the 97.80 as it's moving higher as we're breaking that high. Remember I said we might be looking at that as it breaks that high. So as it breaks on up, if you're going to do that trade, you're going to want to be having a take profit example order to get out of the trade. So like $80 to sell would be your example. One thing you want to be really careful of on this trade, though, is we are seeming to hit a bit of a resistance zone right here at the deviation level, okay? So if we look at this deviation, just be very aware of it. But we're basically right at settlement, and that's where the market is hanging out right now. And so that's one reason I really like doing premium collection trades, because when the market just hangs out, you love it. You're like, you know what? You don't have to go anywhere. Why don't you just sit there and rest for a little while and make a little money as time passes by, getting paid to watch the paint dry. And not necessarily as exciting, but it is more exciting when you see the balance go higher. So just one of many ways to trade Nadex, but you can do premium collection, you can do near the money, at the money premium collection. If you have some time left, which is what I prefer on these types of trades where I'm doing like a $60 trade, is I actually do like to have a little time left on that ticket. So meaning hopping in like an hour before And then if I'm not getting my take profit, then I might want to get out, with 30 minutes, maybe 15 minutes at most left on the clock, just because it's just not worth it anymore. So if I'm going for those $60 ones, 15 to 30 minutes before, if I'm doing the sort of a swing trading strategy, that's one of many different strategies you can use. I don't know how many I have now, but they keep adding up. And it's just looking for different ways to take advantage of the movements in these binaries and spreads and combining them together. I mean, they are different, but they don't have to be completely different. It's like, what do you think? How would you scalp? If you're a scalp trader, you can use these binaries to scalp. Or if you're an option trader, you could use these binaries to collect premium. Or if you're a swing or trend trader, then you got the spreads or the binaries you can take advantage of. You just got to make sure you're choosing the right ones. And that's where the scanners come into play. They help you out with that. So in the meantime, let's go ahead and let's look at a few other markets while that's moving on around there. So we got the dollar yen there. We can go over and we can look at, check out what do we got. We got dollar yen, dollar franc, dollar CAD, and now let's check out oil. So oil is currently moving, got a nice move up off the settlement and sort of took off with a little bit of energy before pulling back. It took off, basically spiked up there in the last 10 minutes, a good, 60 pips, and then retreated back about 50 of it already. So got a big move there, back down to 94.56. I would be hesitant on anything on that. You said that kind of volume order. You can easily see the market pull back or whatever, so I'm going to back off on oil right now. And but it looks like they're getting ready to unload their positions going into the last hour of the oil pit trading right there. And let's see, gold just wrapped up. Let's check out our metals. So they just wrapped up their pit markets there, the open outcry. We got gold. It moved on down. It was pretty flat for a good chunk of the day. Had to move up, had to move down to 0.7. That's a 1 deviation move from high to low, maybe a little more than that. And one of the things I've shown on previous shows is I'll just take like settlement to 1 and go, okay, that's about 24 points. Now let's take the high. Let's go over here to the low. What do we get? About 26 points. So it actually did exceed a 1 deviation level down at that 0.7 move. And so just a important level. We've moved all the way down. We moved a deviation. That's 96% of expected move. We hit that actually earlier in the day. Watch this. We can go here back to this high. We can go right over here. We hit this last night. We hit a deviation move. So we were basically done with the deviation last night at 3 o'clock when it pulled back and went on back down and touched that level. So we knew that, most days, 1 deviation is 68 to 70% of expected move, meaning less than 30% of the time do we really expect it to finish further than that distance that it starts from the previous day's settlement price. We can also go on in and check out silver. On silver over here, we got a nice move, basically almost identical move, which is not uncommon, for it to move down basically 1 deviation, finish that up. The market just opened up and just sold off right there on a lot of these markets. We can also check out copper. So on copper, it also had a very large move, and we can see that move on down, pretty much just gapping right there back to its settlement price from the pits, and then selling on down 0.5, 0.7, actually exceeded 1 deviation, but remember we didn't start off higher like we did on silver and gold. And so it got that 1 deviation, maybe a little bit more than a deviation, but it hit it by about 230, same thing, and then just oscillated ever since right at that level. So just a really easy scalp, swing trade zone over here that you can take advantage of. And let's see, a couple other trades you can look at. We got silver, we got copper, we got gold. We can also look over at our indices. Let's check them out. So, because they were moving on down early this morning. We had a sort of a trend down, just sort of slightly edging down there. There's the Dow, 0.5, hung out at the half deviation mark till about 4:30. Decided to move on down to a 0.7 and then actually down a deviation before the market even opened this morning. Did a little rally right there on the open, and then just slam dunked it right down to 1.5. Had no chance of filling that gap. Was like, not going to happen, not right now anyway. And who knows? The market filled the gap the other day after a massive move. So it might decide to trail on up there. We'll see. We do have a bullish stance on the day for seasonality from about 11 o'clock on. We'll see if that holds true. But running on up there, we got to move up to 0.5, 1. We're at about 0.7 right now. So we definitely reversed. We've hit that 10-minute trailing stop method, which is very effective at calling at least a reversal or choppiness. And so far we are seeing, first we got the chop, but now we're starting to see a little reversal trend, which is good because I am long on the indices right now. And so we can go in, we can check that out. We got the NASDAQ. And on the NASDAQ, we can see it move on down to 0.5, on down to 0.7, on down to 1. Comes up and has a hard time. Closes down, closes back up. This is a perfect example. Let me zoom in on this. So I love that when we get just a nice example for educational purposes. So right over here, we go in, we have like a short in the morning. I mean, this thing's just, bam, heading on down. Closes down, closes up, closes down. Now notice this bar right here. Okay, right there. That bar right there closes below that deviation level. Okay? When that happens, you trail the stop. Then what happens? Well, a subsequent bar closes above the deviation level yet again. So notice right here, it closes above the deviation level. Okay? Without getting stopped out, without coming up here and hitting this. And then another bar closes below the exact same deviation level as this bar closed below. So this bar closes below this deviation level, and then this bar closed below this deviation level. When that happens, I can tighten my stop even further. Okay? Once that happens, I've now moved my stop down. So now you have a, simple, very effective trade. You're going short, and you get stopped out on that following bar right there. Still not a bad trade. Got a solid, 16 points on the trade. Nobody can complain about that. Well, just moving on over. Once that stop gets hit, usually, if it's at a 1 deviation or further and that stop gets hit, usually the market either goes into chop or reverses. And we've now seen that what happened was it did exactly that. It went right into chop, and then now you see the NASDAQ pulling on up, moving on up higher, and doing its reversal. So that's a good clue for you if you're short to be tightening your stops. If you're a contrarian trader, it's very helpful for you to know, hey, this might be a time when I might want to be looking to go long. I could be looking to go long with futures, with Forex, with stocks, whatever it is that you trade. I also could be looking to go in and, place different kinds of positions. Like maybe I'm going to use binaries or butterflies or whatever. Something else that I think every good intraday indice trader is always looking at is the net shares advanced decline. I think it's probably one of the most important, most widely looked at indicators, and it's the advanced and declining shares, the net shares of the New York Stock Exchange. And it'll really start to show you a trend. I mean, you can see, it should look about like your chart. Sometimes it doesn't, though. Sometimes you get one of those indices for that day that's just sort of acting up a little bit. And so it can keep you in check a little bit right there. But right there, I mean, look at this. You see this thing going down and then just taking off. So if you're still short, you need to wake up, okay? The market is heading up. The more stocks are advancing now. Now, obviously, it's still negative because there's so many negative on the open. But more stocks are getting more positive than they were positive earlier. And like I said, it's still in negative territory on the net shares in New York Stock Exchange, but it is moving on up at the moment. And it's a very, very good indicator for you to use. You can use it on Thinkorswim. You can use it on NinjaTrader if you have something like a kinetic data feed or an IQ feed data feed. I think you can even feed possibly your Thinkorswim data into that for the advanced decline. Just have to set it up. And then over on Thinkorswim, let's see here. How do you get it there? If you're a Thinkorswim trader, you're just going to go to, if I'm correct, it's like $ADVN minus $DECN. There you go. Okay, there's our advanced decline. Advanced net shares minus declining shares on the New York Stock Exchange. And they do make this for the NASDAQ, for the S&P 500, for the Russell, for the Dow. But this is known as the broad market index. It's a little more reliable, okay? The other ones ought to pretty much look like your charts. This time we'll give you a little bit of different taste and flair and everything else, but you really don't want to be fighting this thing. If it's going down, you don't want to be buying. If it's going up, you don't want to be selling, okay? It helps keep you in check. And so big tip for you is follow the broad market index, or at least be aware, at the very least, be aware of the broad market index when you're doing your trades. So let's see, with all that being said, what else do we got we can check out? We'll look at a few more of the indices. We got the Dow and we have the NASDAQ covered. And now we'll go ahead and look at a couple more. Right here, going over and looking at the Russell. So on the Russell, it moved on down. It got slammed really hard. Moved all the way down to 1.5. It opened up, bam, down to 0.5, down to 0.7. This morning moved on down to 1, and actually, right as the market opened, it didn't have that nice little rally. I mean, it just like it zigzagged a little amateur hour, knocking the crap out of just about everybody that's in the market before it finished opposite 1.5. Let's check out our 10-minute deviation stop method. Let's see if that told us when to go the other direction, right here on the Russell. So we know the Russell was moving down all morning, right? So we're trailing our stop, and remember the most important one is that one that goes below 1. So we hit below 1 deviations right there. Notice we have not hit all night. We had this big decline, but we have not closed below the 1 deviation mark. All right? Right here, this bar closes below the 1 deviation. I can back up again so you can see that. But right there, you got that 1 deviation, okay? So it's this line right here. I'll highlight it to make it even more visible for you. But this is the 1 deviation mark, and this bar closed above it, not below it. This morning, this bar closes below it. So we're like, hey, if it goes back above that, we think it's over. And then it closes above the deviation, but doesn't break our stop. Then it closes below it again. What do we get to do when that happens? We get to go ahead and move down our stop further, okay? And then it closes, below it. Then it closes, it does not close back above it, but then we close below 1.5 deviations. And we get to move our stop yet again, right here at 11:30. Okay, so at 11:30 we've moved our stop right here on the Russell. The very next bar we get stopped out on the trade, okay, and I mean this thing's been short all night long. I mean pick your short entry. So retracement back, short. Okay, I mean you got massive retracement back shorts over here. You got retracement back shorts right here. You got a nice pullback. I mean, there's another one right there. And you got another one like right over here. I mean, you got a lot of nice retrace and pullback areas. Anyways, but it hits it right here, and then we expect chop to reversal. What do we get? We get that chop right there, and then we're reversing on back up. So it's very helpful for letting you know when that trend may be over, at least for the moment. And you can start following it the other direction if you want to, okay? So you can start going in there, and you can start trailing that stop back. So you can start going, okay, well that means fine, that we're a buy. All right, at some point we got a buy. You can say we have a stop loss, say 5 ticks below the low down here. And then you can say, okay, we're going to trail this thing on up. Okay, it closes above it. Great, closes below it. Closes above it again. Okay, right there. And so now we're trailing that stop on up. And very simple method, but a very simple and easy way to trade. All right, so that gives us a Russell. Let's go ahead and move on over from the Russell to the S&P. So where are we sitting at on the S&P right now? It moved down to 1.5, almost the exact same chart we just looked at. And same method all the way down. Able to trail that stop piece by piece all the way down here. All right, well, y'all stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostics Trading Hour. Let's go ahead and check out some of our agricultural markets. Go ahead and check out corn and soybeans. Had a good move on the corn market earlier today, and moved on down to one deviation. So a good chunk of that, unfortunately, did happen like right at the open, and then it's just been oscillating ever since, giving you all sorts of binary butterfly setups that you could take advantage of. So right there, some good trades that you can look at. And just a reminder to everybody out there, always make sure you got your trading plan in place. So when you get into a trade, where are you going to get out? Where are you going to take profit? Okay? A lot of trades that you do like that. What's your plan? What's your goal? How are you going to put all the pieces together? And, I really challenge you to make sure you have all those pieces together so that way you can go in and, you can trade with confidence. A lot of people hop in and they just randomly place trades. They don't have a take profit order. They don't have a stop loss order. If I'm doing like the whole 60-80 rule, of course I'm getting out at 40. If I'm doing the whole, buy the $15 binary, I'm getting out if it hits my strike. I mean, there's a lot of different ways that you can, place these trades, and you want to place them with that plan and be consistent on how you do them. So now one of the things we can look at is are there any butterflies? We got a few minutes left here until expiration, so we'll check and see if we can find maybe one or two of these for ourselves. that's coming on up over here. Let's go in and look at it, see what we got. So on the corn and the soybeans markets, so what do we got? We got corn and soybeans, let's see, expiring at 215. So you could look at the 655 by 653. That 653 is pretty close. That 655 isn't too bad. That's about a point and a half away. I'd be real cautious on that 653 contract. I'm looking to get in on that. And then you could also, of course, look over at soybeans. You got a 1509 by 1506. Trade on that. Let's maybe check out that soybean contract and see what we have that we might be able to take advantage of. So ZS. So on ZS over here, we got this contract up. And let's see here. It's up at 1506. I like that 1509. I mean, it's a decent little amount of movement. But, I mean, it's been pushing really high. It may decide to have one last spurt. We haven't had a big volume move. We did break the high, but not on massive volume. But I'd probably back off. You know what? I'm just going to play a little bit of chicken at the moment. And not going to go in and grab that trade. It is very... it's very enticing. It's at a new high of the day, but you know what? It might want to finish on a new high. We got 1509. That's almost at 3 deviations. I mean, that's pretty far. You know, so if you're going to go for that trade, I mean, that's 2 points away. You got about 23 minutes where you can do it. And so let's check out some of our other trades we have on over here. Got these in where we can take advantage of them. Looks like we got a few trades on there going pretty good. But yeah, I mean, that 1509, I mean, that is a new high, so that would be like maybe the one trade out of all these that I'd probably look at. Just I would not want to take the 1506. I think it could easily just flip right back on you. And so you just click on that, it opens the ticket up for you, and you can place that order. So, and again, how do you do that? You go in, and right over here, you can do it there, or you can do it inside the, the system if you want to. But we go over here to, we'll just say soybeans, daily, and 1509, and you say sell. Put the contract on, hit place order, and there it is. That's the trade. All right, y'all have a great day. Have a safe day. I will see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned. We got another great show coming up for you right after this.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.